Tuesday, April 23rd, market analysis, Stan Ehrlich. Good morning, 10 o'clock, 10:02 California time. And we start out with indexes, go to futures, and sometimes some other good stuff. So the rally we've got yesterday and today was not a surprise because the market had come down significantly over the last week or so, couple of weeks actually, and got oversold. Fairly substantially oversold. Now, this is the E-mini June futures contract, real time, and we bumped into some support. The close, I believe, low of the body on Friday was still in the support area, although it did drop significantly below it during the day. It came back so-so. And here we are bouncing for a couple of days. Where to? I think this rally is going to stop around 51.27. There's a little red zone up here. And then turn back, and that could be today. And then turn back down, although I think it's going to be this week. The resistance, rally stops. Doesn't have to get overbought. That's not what I'm looking for. I'm looking for some sort of reversal, some indication that we lost upside momentum and the market's stalling out at 51.25 area. And it could be a little higher, but the concept here is this is just simply a rally on the way down to 4,900 to maybe 4,800. That's the second half of December, first half of January trading range, and probably our best bet for the market to turn around in and go back up again into new historic highs. April, May, June, July, August, September, somewhere in August and September top out, because we got the October lows coming again, we hope. It's been fantastic. So that's the story on the indexes in a general sense. Obviously, the different indexes have different numbers. The timing of the tops and bottoms is the same, but the rally high and the break low amounts differ a bit. Next chart is the E-mini, and it is the 1 minute chart. As you can see at the moment, it does look like it's stalling a little bit, but that's way too detailed to come to any conclusion, in my opinion. And we've got the spider rallying very nicely. Oh, I did miss something here. I want to go back to the E-mini, sorry. It is important to note that from last October, the October lows, to the highs we have seen so far, the Fibonacci retracements that are most common and most important, 38250 and 618% retracements. 382 down to 50% retracement is right smack dab where my support area I just talked about is located. So I'm not going to be surprised if it's at 382 or maybe a little lower than my support area at 50%. But certainly, I think it's very likely to be in that area. Okay, forward, good. Spider, no comments. Spider, 10-minute, let's go faster. QQQ is kind of leading the way up. We've already managed to go back up above, and that was yesterday. One little now resistance area, it used to be support, didn't hold very well. But the top of my rectangle here did stop the rally on a break on the way down. And it's obvious why I drew this. Important highs here. When it did get through it, it gapped up a lot. Probably a lot of buy stops there. Anyway, on the retracement, it got to it and through it yesterday, and another resistance line to it and through it and right through it at the moment. So, like the other indexes, a little bit more strength would not be surprising, and that gets me up to 432, 433. I think that's our best shot since we're already past the first two. Yeah, and then down. 5-minute Qs and 432.80, beginning of the red. It's exactly why 432 something. Yep, that's where I think it's going. Next, NQ, NASDAQ, obviously same as the Qs for all practical purposes. Normal, little rally, turn down. 1 minute chart. Yep, 1 minute chart looking like it's losing some momentum. That does not necessarily mean it's going to top out for the moment or for the rest of the day. Next chart, IWM. We got a little rally up to my first decent area of resistance, not quite. So if everybody else is going to go a little bit more, this probably is going to go up to 201, 202. We're 98.80 at the moment already. 202 sounds more likely. Next, Russell 2000. We've got a nice sharp rally. This is not the same kind of a chart. Remember, the Russell has done significantly different over the last couple, 3 years, going a very huge sideways trading range, essentially starting in January of 22, or 2.5 years. And then it topped out and topped out and topped out and topped out. And finally, we seem to be making some long-term progress. Recently, a new high for about 2 years plus. Now we have to hold on this last break, which was in an area of support. I've got a rectangle here, so that's good. We'll see what happens. I can see it coming all the way back up to these highs, but again, I got to remember everything else looks like it's going to stall out. So maybe 2050. Okay, bonds. Nice little pop, small rally, 19 up on the day at the moment. But we really have to close over 116.05 in order to get anything significantly going. And that's still going to bump into resistance and then resistance and resistance. And we're not even out of the channel, and I'm giving it another few days in the future. So over here, yeah. So somewhere in here, if it can get there in the first place, I'm not particularly confident it will. It's going to make somewhat minor new lows. Maybe still in the channel, possibly sideways a lot. I think it's bottoming out relatively soon, and I don't expect any major downside moves. So that's why I'm kind of describing it that way. Basically looking for buy signals. Next, we've got the standard candlestick charting for these on notes. It did fulfill its minimum downside objective off of a little double top formation. And this stick, so to speak, which is the depth of the formation, said we're supposed to go down to 108.28. I think I claimed at the time, rounded up to 109. Of course it did that, but that's 2 weeks ago, and we dropped off a little bit more since, not a tremendous amount. In fact, the last week has been going sideways. Same kind of commentary for bonds. Probable new lows, not by much, taking its time about doing it. And then I think we're going to start something really nice on the bullish side. Next, crude, heat, unleaded, and natural gas, but nothing substantial. We're in a support area. Remember, it was resistance on the way up. It did stop for a week and a half or so, plowed into it, then stopped at the high of the resistance area and dropped off, but stayed inside and finally pushed through the top. Now on the way back down, it becomes support, and we seem to be moving out of it. Right now, we're about exactly the top of the rectangle, red rectangle. And now I want to close higher than where we are, at least in the next couple of days, to feel a little bit more confident the support level ended up holding. Too bad I'm not getting any signals at the moment. We got natural gas. Trend is down. Trend is your friend. Slowing down, though. It looks like it's kind of flattening out. No signals. I don't think you can get away with calling that a double bottom. I think that's a little bit too low, so I don't buy that. Lower lows over time, lower highs over time. Bear market looking for new lows in a week or 2 or 3. And I don't think the rally's going to go very far. Next, gold. Dropped off like a rock this morning, but is all the way back up to above yesterday's low and where it opened and about the high of the day. This looks like some sort of exhaustion weakness happening in only a 2-day period. We didn't get oversold, but RSI did drop off a heck of a lot in a 2-day period relative to the last couple of months plus, it looks like. Okay, so have we hit a short-term low? Maybe so. Are we going to see new highs again? I don't think so. So I'm looking for it to roll over and start to turn down again. That's about the best I can say. And I have to say the same thing about silver. Charts are extremely similar. This is the silver. Going back to the gold, widening it a little bit for you. Okay, don't do that. Good, good. Go back to the silver, gold, silver. Okay, so the story's the same. Dropped into some support, and there's a decent amount of resistance that starts at those lows. We'll see what happens. I don't trust a rally. Next, platinum has just tanked. Whopper of a break. Looks like we went down 1, 2, 3, 4, 5, 6, 7 days in a row so far. We are not even oversold, although we came extremely close to it, and that's since January we're down here. So we're getting very close to probably a turnaround, a bullish bottom, a bearish bottom for the moment. And I'm looking at 900 almost exactly, maybe down to 881. It could turn around at any time because it's so close to being oversold. And the odds of it going down another day after 7 days in a row or so. Next, copper. Punch through the resistance level. Now pulling back to what was resistance is now some support. Did fulfill its minimum upside objective on that very large, but relatively flat, very large time-wise, but vertically not that big, head and shoulder bottom. So that's ancient history. Classic breakout, right into resistance, went right through it like a hot knife through butter. Big up day, retraced into support, halfway to all the way back to the neckline, stopped cold turkey in support. Oversold doesn't even apply in this instance. And zoom, 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 objective fulfilled about a week and a half ago. Still more upside follow through. I'm afraid to say this, copper looks like it could make new highs again. I think it's going to start to turn up again. Next, soybeans, soybean oil, meal, corn, and wheat. I've got some, and I've started to talk about this just last Friday when we had a brand new bullish engulfing buy signal, ER signals buy signal, and this is the soybean contract nearby, July, creating a double bottom. The last low was extremely close in price to the low we saw just Friday with that bullish green bar. I'll zoom in on it for you. And that's it from Friday. Outside up day, oversold conditions, met all my criteria with customized RSI levels and a little customized worth of bullish engulfing. Not exactly the same as the definition original. But look at this, how close it came. I think it's a couple of pennies or something. Not only that, it's also at the bottom of a support area, a very substantial one. And the proof of the pudding in terms of long-term support holding, double bottom formation, bullish engulfing is the close we need above 242. Sooner the better, although it's not going to get there this week probably. Maybe next week or the week after, relatively quickly. That would be very, very interesting longer term. The double bottom minimum upside objective is, I'm just eyeballing this right now, should be, oh, good, right in the area of that resistance level, around 13, let's say 13, 1310, 1307 I've got. Next chart. So, possible long-term bottom and beans. A lot to have happened before I feel real comfortable about long-term stuff. We have a potential head and shoulder bottom in soybean oil. This is not a good place for a head and shoulder bottom because most of the time these formations are at the bottom of a bear market or maybe at the end of a big sideways trading range. Not very often do you see a good one, and we won't know it's good until quite a while from now. So I gotta let that ring. Sorry about this. Play out and see if that shoulder low really applies as a shoulder low. So the fail safe here is closing below the lows of the last few days. Let me zoom in again. Terribly important that I get this. So I do not want to close below 4,400. It's 40. Oh, here we go. Oops. Guess what? The money show's calling. But anyway, I think there's a possibility of the support area, even though there was a bullish engulfing signal, to be a turning point. Timing is right. Prices are right. Everything is good except neckline is downward slanted. I got no problem with that. There's even another auxiliary important trend line in the ballpark, and that goes off of that high and the same pivot point. So they're very similar, long-term bear trend line and neckline, but it's apparently forming after some, not really a lot, of sideways movement. So, hey, I'm keeping an eye on it. That's the best I can say. Next chart. Again, I've got bullish things to say about soybean meal. We did have a bullish engulfing buy signal on February 29th. It was and is so far the low of that big move down. And now soybean meal has already made new highs since that bullish engulfing buy signal. I don't have the strategy turned on, so you're looking at a straight candlestick chart without my indicators, except for RSI. And the fact that it's got a green bar on that particular date means there's a signal on that date. You can see it's a bullish engulfing, but my code changes it to green and everything else either yellow or whatever. Okay, so this is starting to show some progress. Momentarily, it's not holding. I wish it would close above the previous highs. Let's watch these grains very, very carefully. The next one is corn. Of course, we bought the bottom of the corn market to the exact day, February 26th. But it is making upside progress and does not have far to go to make a new high since February 26th. And there have been no lower lows. So far, so good. We've got the low damn day. This line is probably a little out of position. Sorry about that. More like up here, a little resistance. And in fact, probably I can afford to put it even a hair higher. Yeah, that's even better. So we're approaching previous tops, a little resistance level because the previous lows at the same prices. And it might stall out there. We're not close to being overbought. I don't know. Let's watch. This could do exactly what meal just did in a day or two. Wheat. Yes, we did get the low in the wheat market with a double twin green ER buy signals on March 8th and March 11th. The lowest low for the bear market move. And so far, it has been the lowest low. And guess what? Yesterday and today, wheat has made new highs since our buy signals. Doing great. Overall, long-term trade, obviously. Resistance levels still a ways away. We just turned overbought today a very tiny bit. It's got more strength, I think. The breakout at the moment and the fact that it looks like longer term, it might be bottoming out is very important. The next important level for it to overcome for a long-term bullish scenario is that high that we made back on December 6th. Price 263-ish. Next, cattle. Well, gapped up. I talked about that yesterday. Gaps are almost always closed. I almost always say it's closed the next day today. And if you had bought at the bottom of the gap today, you'd have a good scalp. A little risk after that did come down a little further. And by the way, every single time I am in any kind of a trade, whether it's my discretionary idiotic trades or my strategies, I always have a protective stop. I nickname them smart trailing stops, STSs, or stop loss order in mind in advance before I get into the position. I'm ready to place immediately my protective stop. So having said that, it's okay. I still think it's going to work its way a little higher. Next, hogs have violated quite a bit pretty quickly. Like what I see, no problems. We did get the top of the market, and we still do have the top of the market bearish engulfing ER sell signal on April 10th. Will it make a higher high? There's a good chance. We're nowhere near. Well, yeah, actually we are very close to overbought. Not quite though. And this does look like a lot of ground being covered in 3 days. We'll see. There's a chance to actually roll back down again. And I'm going to trade station to cover the ICE exchange, International Commodity Exchange in New York. And we've got RBOB or Harbor Gas. Had a bearish sell signal 2 days ago. It did drop off to new lows yesterday and again today, but we're popping out of this old downward sliding channel, which is now a support, a bearish support line. Bearish because the trend's down, support because the market's trading above the line, bounced off of it very accurately yesterday, dropped a little bit below it today, but is popping back up like a ping pong ball out of water and is a bullish engulfing. If we had been oversold today and we came so close, then that would turn green and I'd have an official buy signal right smack at the top of a previous, channel top. That's kind of cool. I'm looking for this to attack the highs of the trend and maybe make new highs. New York Harbor Gas, I'm sorry to say that. OJ, it's still stuck in this pennant. Next. Coffee, okay. Big gap down. That's going to be a problem because your gaps are almost always closed. I'm looking for it to rally back up to about 223, 230, sorry. 230 anytime now. Maybe it'll take a few days. I don't think this is going to be a breakaway gap, and they're a little less likely to be closed. Sometimes they don't get closed. But that breakaway gaps are usually closer to the actual highest high. And that was down a bit. Okay. Yes, I'm bearish. Yes, I'm looking for lower levels. No support until we get down to 200. I think we're going there. But I think the gap's going to get closed first and then go down there. Next, cocoa. Here too, starting a bit, move down. Will support, which we are starting to get into, support hold. And so far, today's low in that area, and it's coming back reasonably well. I'll reserve comment for tomorrow. Sugar got oversold, bouncing a bit last 2-3 days. Bear trend, new lows for many months, lower highs also. What can I say? I think sugar may have just run out of steam already. Yesterday's rally high. It is up a little bit at the moment. Hardly. Okay. Bearish, looking for new lows soon. And cotton. Now, we jabbed away at support. It held pretty good, and we were oversold, and we did rally for a day or two, but it was kind of feeble, and today, you've got another bearish engulfing at a resistance level in general. It's pretty sloppy. I don't really have a big rectangle in here, but it should be somewhere up to about right about there. Yeah, 83.35. So there's a chance it could come up a little bit more. Other than that, you guys can see the fact that cotton really had a head and shoulder top formation, which worked great. It only took it from March 14th until February 12th, less than a month for it to do the job. Anyway, now we're lower, oversold, trying to bounce, but I don't like to see a bearish engulfing when the trend is fairly strongly down. New lows coming up soon. And back to RBOB. You guys have a great trading day. Mañana.